You're listening to Beyond Insights, your go-to podcast for all things accounting, business, and technology.
From cybersecurity and AI innovations to sustainability and work-life balance, we've got you covered.
We host insightful guests from different backgrounds, industries, and locations all around the world.
From this diversity of thought, we aim to find solutions to some of our most pressing business problems.
Thank you for tuning in. Let's dive right in and go beyond insights.
Hi everyone, thank you for joining us on today's episode of Beyond Insights. Today we are joined by Byron Cowie, who is Head of Finance at Elliptic. Elliptic is a blockchain analytics and crypto compliance solution that is the second largest crypto verifier in the industry globally and a really big player in the European market. So hi Byron, thank you for joining us.
Hey Alex, real pleasure to be here. Thank you for having me.
Awesome. So maybe you can give us a bit about your background to start, and how you ended up working in blockchain analytics and crypto compliance.
Yeah, sure, of course. I think the first thing to note is, even though like the industry is like very nascent and the company is quite a niche market, the role sort of in finance is still somewhat traditional in a sense. So there's still all your traditional finance elements added sort of on top of it. But I qualified as a chartered accountant in South Africa. Was always like good at maths, accounting, all those good things. It was always a career path I wanted to follow. And it worked in really traditional finance jobs up until about 2018, both commercial and in professional services. And then 2018, I just really got this bug to sort of work in a startup and a scale-up sort of company, and sort of started searching what would be the right thing for me. I'd given my 3 months notice at my job and thrown caution to the wind, and stumbled upon Luno, which is a sort of global crypto exchange, an exchange being a place where you can buy and sell cryptocurrency. And they were looking for the fourth member of their finance team. It was a very young business at that point, less than 100 people. And yeah, that was me. As soon as I started preparing for the interviews, learning more about blockchain and crypto, which is something I'd largely like ignored up until that point, is like this internet casino culture. And then was just really like hooked. And it was a fantastic journey. It was, we grew the finance team up to like 40 people. We scaled the business globally. And I was there for 5 years. It was a really rewarding 5 years. And during that time, Elliptic was actually a supplier of Luno. So I got to know the company very well and that sort of thing. And then when it came to me wanting to re-enter the market again, Elliptic was a nice headcount size. We were about 120 people. The finance team is 6 of us. It's VC backed, it's scaling. So it really like ticked a lot of the boxes on what I wanted to be doing. So that took me through to my role where I am now, in a blockchain analytics company.
Awesome. Oh, that's a really exciting story. And for those of us who are listening and maybe don't really know much about blockchain, how would you explain it and how prevalent is it?
Yeah, sure. So a blockchain really at its heart is just a technology. So it's made up of basically a decentralized digital ledger. So decentralized is a big term in blockchain and crypto, meaning that it's not held by or controlled by a centralized source. It's sort of owned and run by the participants of the network. So that's really key to like cryptos, like ethos and belief. And then a digital ledger is almost just like an accounting ledger. You do get public and private blockchains, but I think the ones we're more familiar with are public ones, which are sort of visible on the internet and to anyone that wants to have a look at them. And a blockchain is basically blocks of data that are stored together linked together to form a chain, so hence the name blockchain. And the blocks are sort of cryptographically secure. So those are very like complex maths transactions that make them secure, which means that they're like immutable, which means that they're unable to be changed. So I think once they reach sort of consensus from all participants on the network. And I suppose like something you may ask me after that is kind of like, why would I want my information, especially to be publicly available? And I think there's lots of like benefits to financial transparency and running sort of peer-to-peer networks that a blockchain offers, which the traditional finance system doesn't.
And so I know a lot of accountants, or maybe people in general, they kind of use the words blockchain and crypto interchangeably. I know that like the one is the system, you were saying the chain of blocks. How would you kind of differentiate them from each other?
Yeah, it's a very common question, I think, just because crypto is sort of blockchain's main use or prevalent use at the moment. So that's sort of why people use the term sort of synonymously, but that's not necessarily technically correct. Like I said earlier, blockchain is really the underlying technology that a cryptocurrency can like run on, whereas necessarily cryptocurrency gets its name from being sort of cryptographically secure, so crypto in that sense. But I almost prefer the term like a non-sovereign currency. So if we like went back before 2008 and before Satoshi Nakamoto was the founder of Bitcoin and his white paper, or their white paper, we don't know who it is. So before that, we only really sovereign countries could really issue currencies. We had this like double spend problem whereby we couldn't make something digitally scarce on the internet. And Satoshi Nakamoto's white paper made the ability for things to become digitally scarce. And hence, we were able to launch cryptocurrencies on blockchains rather than just relying on sort of governments or states to sort of do that for us. And it allowed this sort of like a notion of being able to transact with one another on a sort of peer-to-peer basis. So yeah, the TLDR is probably that the blockchain's the technology and cryptocurrency is probably one of its uses and the predominant one at the moment.
Oh, that makes sense. And I think that's one of the really cool things about cryptocurrency is that you don't have to go through like an official sort of government third party. It's decentralized, as you were saying. And I know that quite a few people have referred to it as like a trust machine or referred to blockchain as a trust machine. How do you think of that? Because I know a lot of the work that you do involves looking at risk and looking at like potential areas where maybe there's been money laundering or, people breaking your trust. I was wondering how you think about that.
Yeah, sure. It's also obviously been really relevant out of the news that came out of like crypto's bear market where we had all these bad actors. We had, FTX, we had Sam Bankman-Fried, we had CZ's, Luna Terra stablecoin that depegged, and there was just a whole lot of like bad actors in the industry at that time. And I think like necessarily it sort of tarnished the industry with that sort of same brush around it. But it wasn't necessarily the technology that failed us necessarily in those cases. It was centralized parties that were interacting with the technology. So I think that was like a really like key learning out of decentralization as sort of like a principle. But I suppose like necessarily anything that's sort of open, transparent, distributed, and those sorts of things, those necessarily build trust. And I think a lot of Elliptic's work and the work that we do in blockchain analytics kind of works on top of that necessarily to collect intelligence around what we know is happening on the blockchain and to make to make people aware of those things so that they can be compliant in their businesses, avoid money laundering and nefarious sources of funds and those sorts of things. So I think like transparency and openness of the blockchain is really it is one of its major strengths.
Sense. And how would you explain blockchain analytics and kind of why is it important?
Yeah, sure. Blockchain analytics really is just at its core a suite of software tools that software providers sort of offer. So at its core, it may be something like transaction monitoring or risk screening. So let's say, for example, you were sending me some crypto across the blockchain. I imagine it would go through a Elliptic suite of products and would probably be pretty low risk in terms of a transaction, right? It's peer-to-peer between two individuals. I imagine it's not going to be the largest sum or amount. But you could imagine that if there'd been suspected money laundering or funds that were coming from a sanctioned country and they were trying to exchange those cryptocurrencies in another country to cash them out for dollars or something like that, you could imagine the risk scores on those transactions would start to become pretty high, right? And any sort of crypto institution that may be dealing with those funds, which may be from nefarious sources, dark web markets, criminal proceeds, or anything like that, you would start to flag those transactions as really high risk, give reasoning behind them. Elliptic obviously doesn't make decisions for its customers. We just provide them with the information to be able to set their own decision-making criteria. And we sort of collect intelligence on the blockchain to be able to flag transactions, wallets, service providers, even on the blockchain to be able to do that. So that's one of its major use cases. Another one might be for like law enforcement or government agencies or regulators. And you can imagine like when there's like a crime scene and the police are trying to like string suspects together and that sort of thing is the analogy that I like to use. One of Elliptic's tools called Investigator sort of allows you to link wallets, transactions, flows of funds across different blockchains, maybe through mixers, which is something someone might use to sort of like hide their funds or mix it up with others, like in classic money laundering. And they could start to piece all of those together and build evidence on a case or against an individual in those ways. So it's like a suite of software compliance tools that businesses would use.
It's cool. It's like a digital detective. It's like that image of all the strings connecting to find the evidence.
Yeah, totally. I mean, it can be. It's a really good use case for the product. I mean, using the intelligence that we've collected over numerous years. I mean, fortunately, the blockchain has only been around since 2008. So it's quite easy to sort of, and it's open, transparent nature for it to accumulate information and intelligence on the blockchain. So yeah.
So you work with a lot of quite big institutions, I know financial institutions, law enforcement. So there's obviously a lot of really important institutions that are using crypto. And I was wondering, like, are the numbers of these institutions increasing? Do you think that it's going to become more popular and more prevalent in the future?
Well, if I just look at it from a sort of macroeconomic level at Elliptic, we're growing our revenue all the time, right? We have a recurring revenue base sort of as a SaaS business, so like software as a service. So that obviously means just at a macro level, there's more and more clients and customers that are coming, having a use case for the product and that sort of thing. We also have a really good like stable of very well-known financial institutions, banks, and that sort of thing that use our product and have used our product for a long time. So that's a really good sector of clients. And then you obviously have your traditional crypto businesses, your big exchanges, your wallets, your market makers, and all those sorts of things that have always sort of been in the space. But I think to bring it back to your question, the sort of market cap of the space is growing all the time. That's just not necessarily due to prices increasing, but more sort of people coming into the industry, more blockchains being available for people to use. And I think it's becoming more and more difficult for financial institutions to necessarily be insular from crypto. So even though they may have policies whereby they say that, a bank may not receive funds from something which has come from a known crypto source, if you hop a few transactions away from that, it's probably come from a crypto source. So I don't think you can necessarily be completely insular for it. And then obviously the ETFs that were launched this year were really like a watershed moment as well. There was a massive inflow of funds from just institutions into the crypto market, whereas it had largely been looked at by most of the large financial institutions over a period of time as sort of like the retail investors, like speculative investment space. I think that was like a really, really big and important moment for crypto and blockchain, that those institutions were joining the party, as I'd like to say.
Yeah, I think definitely in the future, as you said, they can't remain isolated. Everyone's going to have to kind of get on board with their, I don't think, well, we can maybe debate this, but I don't think normal money is sort of going anywhere anytime soon. But I think that definitely there's going to be a combination of crypto money and sort of standard or fiat money.
Yeah, totally. I think it's sort of like always compared to like the internet, right? The internet didn't replace things overnight. It happened over 30 years. I mean, you think back probably to our childhoods and we played like 2D games on computers and that was their use case, right? No one really knew what they were for. Now we shop on the internet, we order cars on the internet, we I don't know, do everything. We work on the internet. We're talking to each other on the internet. Podcast didn't exist not so long ago because of it. So I think there's like a whole new economy that sort of awaits for crypto. But again, in our lifetimes, hopefully in the next decade, probably not. Like, but there will be a flippening, I hope, at some point, and that's why I work in the industry.
It's really exciting. And definitely, yeah, if you think of the idea of the internet, there's so much that we could do now that I don't think we could have even imagined back in the day. On the topic of ETFs, I was wondering how involved you've been in the process and how does this kind of change the landscape of crypto regulation and transaction tracking?
Yeah, sure. So a lot of our customers are obviously financial institutions and that sort of thing that would have been involved in the ETFs. They need to obviously be sure that the funds that they're receiving, or crypto funds that they're receiving, come from good sources that are not from illicit sources and everything else. So generally, yes, it's the work that we've been doing over years, generally, or everyone working in the industry to make it a safer, more reputable space has generally definitely contributed towards that. I think there's many angles to look at the question, in the sense of there wasn't just like blockchain analytics which were making a safer, more compliant space. There was also, actually, you mentioned the word regulation. Like, licensing is a really hot topic at the moment. Like, every country around the world is sort of either in the state of having just launched or launching some sort of like regulatory or licensing scheme for what we generally call VASP, so virtual asset service providers, to sort of become compliant to and become reputable to. It keeps the consumer safer. So I think there's definitely been somewhat of a changing of the guard, and that if I rewind even back to 2018, it felt like crypto was a little bit like the Wild West of these cypherpunks or early adopters that were speculating on these new coins, these new things that were happening. And it's really felt a little bit mature, a little bit more grown up at the moment. Sure, there's still those spaces on the internet where you can get your fix of, this coin that's just launched, or this meme coin that's just happening, and that sort of thing, which I think has a place for some people. But obviously, it's really nice to see the industry maturing, and like the ETFs were really like a watershed moment towards that. So that was very cool.
Very cool. So it's becoming a lot more regulated, and I suppose then we would hope a lot safer.
Yeah, I mean, generally, just like regulation is obviously not everyone's cup of tea, but in terms of like getting mass adoption and a safer space, and especially seeing it generally as a financial product, it is a means, generally, at least cryptocurrency, the blockchain can have other uses, but transacting with one another and that sort of thing, I think it needs to be a safe, compliant space. So I think if we look at like some of the work that Elliptic's done on various like hacking groups and dark web marketplaces and all sorts of things which exist sort of on the dark web, and like keeping other businesses safe from funds or their customers from transacting with those sources or scams and those sorts of things. It's really done a stellar job among them and other players, regulators, other software providers, sort of on making it a really much safer space and much more known space.
I think that'll be encouraging to. I know a lot of people are still quite skeptical about cryptocurrency, and I think that having this knowledge that there are more regulations and that there are people or companies like Elliptic that are trying to make sure that you don't have sort of criminals coming in and taking your money, it's really encouraging.
Yeah, for sure. And we obviously work with a lot of our customers as well to sort of see what they're seeing out in the market, because generally they are at the coalface sort of what's happening, like high volume exchanges around the world where you can, or any sort of neo bank, whatever, where you can buy and sell crypto as like in your wallet as a consumer. They're generally seeing a lot of trends in terms of like financial crime, romance scandals, scams that are going on, nefarious activities. So it's really like almost like a two-way street in that sense, in terms of providing the software, but always obviously listening to your customers is super important.
And then to look back at your job working in the finance team at Elliptic, how does this compare to other jobs that you've had before? Like if someone's thinking of joining a company like Elliptic, do they need to have a background in crypto? What would you say your sort of day-to-day looks like?
Yeah, the day to day can obviously be quite chaotic. It's a scaling company, in a nascent industry. There's a lot happening in crypto all the time. So you sort of have to be sort of very much on top of that, on top of the news, on top of a lot of things that are happening. But I mean, at the end of the day, think sort of somewhat more traditional blockchain or crypto businesses are still going to have legal entities. They're still going to employ people. We're still going to have management accounts. Hence, the connection between you and I through SIFT, those sorts of things. Like we still have a tax return. We still have an audit, all those sorts of things. Still very much a traditional finance business in that sense. Yes, we're a scaling business. We're VC backed, so it means you've always got finite resources to build your business to its next maturity level, to speak to fundraise again, and all of those sorts of things. So I think working in a small scaling business requires you to be very much a generalist. I mean, yes, I do have a fairly traditional path, but I think there's a lot of things that I can do, problem solve, and that out of my realm of education or expertise that just sort of happens. Like there's not enough people to always solve all the problems that are happening around you. And then so that the day to day can be quite common in a traditional finance sense, but it's also has a large element of keeping up with the industry and also just generally scaling a business that's growing in an industry which is growing along with it, I suppose. So to your question then maybe around like people wanting to work in the industry, do they need a background in crypto? I mean, everyone's got to start somewhere, right? So, I mean, I started somewhere. When I started at Luno, I was asking some of the worst, most clueless questions to people around me. And it didn't take long. I sort of caught on, upskilled myself. There's YouTube University, there's, lots of like resources around you. A lot of books that I read actually very well written on blockchain and crypto. And you just sort of would learn that way. But I suppose some of the more traditional businesses that work in the spaces, your exchanges, your blockchain analytics, your market makers, they're all going to have HR professionals, legal professionals, compliance professionals, a finance team, all of those sorts of things. There are ways in which people with more sort of traditional background can get into the crypto space. I think as you move more into sort of like decentralized finance and working for like a DAO, which is like a type of legal entity which people in crypto have created, it's probably the less likely. I think you would probably graduate to that from a sort of more traditional crypto business in a sense. So I think in that respect, like it certainly is is a world of opportunity at these businesses that are generally always hiring as well.
Well, it's really exciting. I think it's nice to hear it's not sort of, like you said earlier, the Wild West out there. It is like just a regular business. But I think in a way it makes me think of when I joined SIFT as well, like that startup environment. You really just have to figure out what you can do. You might end up doing things that you really have no background in, but you sort of learn as you go along, and you actually, can learn quite a lot.
Yeah, it definitely does throw scaling companies, startup companies. They generally do throw a lot at you, which is why I think like sort of being open minded, being a generalist, just generally being good at problem solving. I think pragmatic about things. I'm also not scared of like making decisions that may be wrong. It's just sort of like ingrained in me now. It's kind of like not always someone else to make the decision for you. So if often sort of as a chartered accountant at the business, I'm probably one of a few people that knows a thing or can do a thing, right? So hence I have to make the decision on it. I'm, far from a tax expert, but I can deal with tax people. I'm far from a treasury expert, but, I can deal with our bank, our FX provider, all of those sorts of things. And, you just learn along the way, I suppose. So the experiences are probably, very similar in that sense. I mean, obviously, you guys are also sort of like a B2B product, global product, that sort of thing. So it all has its sort of nuances and challenges, opportunities, whichever way you want to look at it.
Yeah, definitely. But I think it's exciting to be in that position where even if it might be scary at first that you're making all of these decisions, you can go, okay, maybe that didn't work out perfectly. I can try again.
And yeah, there's very few things in life that are sort of irreversible, sort of in a business sense, right? Like, you can always course correct down the line. You can, you practice that decision making muscle on smaller decisions and that sort of thing. retro them. So yeah, totally is a really good point.
And you mentioned so DeFi or decentralized finance versus what do you say, TradFi, traditional finance?
Yeah,
I was
TradFi.
wondering if you could unpack that a little. I had to look up all these terms before today.
Yeah, so as traditional finances are very much a centralized model, like for example, let's say I wanted to send you money internationally. It would generally have to go across the SWIFT network. You would have to go through your bank. You'd have to book an FX deal. Then it would go from your bank to the central bank, to the clearinghouse, to the, wherever else it needed to go before it ended up with you. And there's so many middlemen, centralized parties holding our funds and that sort of thing. Decentralized finance necessarily at its core allows you to sort of be your own bank. Necessarily, you can open up a non-custodial wallet on which only you have the keys to open and transact on. And you can, start using crypto and transacting on the internet for it, running your business that way and that sort of thing. And we could send each other funds across the blockchain, just peer to peer, right? Directly from me to you. It doesn't always have to go through a crypto exchange or wherever else. Like the nature of the blockchain was necessarily at its core for it to be sort of decentralized. And I think the analogy always goes back to sort of read, write, own as well. So like Internet 1 meant that we could read stuff on a screen. Internet 2, like with social media and things, we could write things, put them on Facebook, do blogs, do all those sorts of things. And with Web3, decentralized finance, we can actually own. So that's really cool. We can own like protocols, we can own cryptocurrencies and things and it's not just the currency, it's a technology, it's, being part of the blockchain and those sorts of things. So it's a really, really interesting and cool space. So.
Really cool. It's breaking down a lot of those boundaries that you would traditionally have, like having to go through a third party.
Yeah, that's very much sort of at the core of like peer-to-peer transacting, and what Satoshi's and Nakamoto's like white paper sort of allowed us to do, and was the real like breakthrough on his white paper, or their white paper. So.
Awesome. It's been really great getting to know a bit more about blockchain, about cryptocurrency, and about the kind of compliance work that you do at Elliptic. I was wondering if there was anything that people should take away from today. What would you like them to take away from listening to this podcast?
Yeah, it's a really nice question. I liked sort of chatting to a different audience about it. You do sort of get a little bit in the echo chamber working in the industry, and always just talking to people who you think know more than you, but don't always, and whatever. But I think to people that are completely new to the space, I would just say like there's nothing to be lost by, interacting with a little bit of money in the space, buying a little bit of Bitcoin or Ethereum, sending it across the network, doing different things with it. And you'll slowly become a lot like more comfortable with it and like working out what it's for. I feel like there's only things to be gained on that for newbies to the space. Like it just becomes a lot less daunting to deal with. And then for those people that maybe have been working in the space for a long time, you can become quite jaded. It can become up and down. It's a roller coaster. We're in a bear market. We're in a bull market. We're under-regulated. We're over-regulated. We're all sorts of different things. And I think it's always just like, it was cool in like preparing for this that I was also able to like zoom back a little bit on my own journey with it, and like how enriching it's sort of been to sort of maybe it might not be as big as the internet, but it may be as well. And I was hopefully there near enough to the start. So I think would be just always like keep zooming out, and not just on the price, not just the number go up on the price, but just generally on what you're learning and what you're doing in the space. So yeah, those would be my main two takeaways.
I think that's awesome. I think it'll be really interesting to see what happens in the space, whether we all become much more involved in crypto, and what the future will look like. Thank you so much for joining us today.
Yeah, awesome, Alex, and thank you. The questions are really cool. They're very thought-provoking as well. So I could see you put a lot of thoughts and effort into sort of what you wanted to ask me, and got me thinking as well. So it's cool.
I'm so glad. Thank you. And thank you to everyone who has joined us today. I hope that you all learned as much as I did. And we'll see you again next time.
Thanks for tuning in to the Beyond Insights podcast.
Please like and subscribe on whatever platform you're listening to right now.
And please share with any of your colleagues or friends or family members that you think might benefit from listening to this podcast.
That's all from us. Until next time, see you then.
Bye.